Welcome back to the channel, everyone. Today I want to explain why it's only a matter of time before the AMC squeeze. This article collates all of the bullish activity that's happened in the last few weeks and the last month or two all into one place. I have to admit, after I read this article, it made me want to go out and buy even more AMC shares. So stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to all of the new apes that have just joined the Patreon and the private Discord and became part of the team. There you get urgent updates and news and due diligence about AMC before I even make a video, linked in the description below. And as always guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, all of this should make you feel very bullish. Great signs of a squeeze in one package. We've seen interesting action lately on both AMC and GameStop. Short sellers have been pushing the price lower to create fear, but most importantly to push call options out of the money. This might also create some minor selling pressure, but like we've seen from the statistics of different brokers, money flow to these stocks has remained positive from retail. And like you will soon see, it's also positive from the institutions. So why is price going lower? What's happening? Why don't we see any action from Gary and the SEC? Relax guys, we're fine, and in fact we do see action every single day. You just need to know how to read it. There's a lot of technical and fundamental evidence that right now makes it seem like we've finally found our bottom range and are loading towards another gamma squeeze up. For those who don't have the time or passion to look at evidence, longer parts of text or sources, I will write a short summary about things we can consider extremely bullish signs right now. Number 1. Retirement funds are loading up on AMC. This is an extremely positive signal. Public sector seems to know that AMC is worth buying right now, and it seems like Uncle Sam wants to keep part of the cake for himself. We can see from Whale Wisdom that the New York State Common Retirement Fund just added a whopping 178,555 shares. We also saw the Arizona State Retirement System adding a whopping 77,772 shares. And finally, the state of New Jersey adding 229,000 AMC shares. I personally think this is massive news because retirement funds tend to only invest in the most solid and most reliable and most risk-free investments, such as ETFs or government bonds and gilts, for example. So they clearly see AMC as a good bet right now. But you might ask, why now? Well, I think the public sector knows something big is about to happen soon and they want to keep part of the money on their own hands. They couldn't buy in earlier because that alone could have triggered the squeeze. I believe that the SEC, AMC and the government are all following a plan that allows them to minimise damage to public sector and markets and also tries to keep the value of US dollars more stable. Number 2. Look at the numbers of the shareholder vote. It seems like AMC could even be shorted over 1,000%. For the first time in our journey, we've actually found a reliable source of information to calculate average amounts of shares in each shareholder's hands. As a quick update on that, we've got 34,400 votes and 41.3 million verified shares. Again, that scales up and extrapolates to around 5 billion AMC shares in issue. Now, I saw some comments on my video yesterday saying that this average and this number of shares is just plain wrong, and that the only true average is Adam Aron's average of 120 shares per ape. But I wanted to say that that average was only calculated based on the legal number of shares in issue. Adam Aron simply took the legal number of shares in issue of 513 million and divided them by 4.1 million apes. He did not include the synthetic shares into that count. And now some of you might say, well, Tom, there's just no synthetic shares. And to that, I have to say you're clearly deluded. You can absolutely see from this average that we're currently averaging around 1,200 shares per ape. Now, again, in my video yesterday, I did explain why if you just take this pure average and extrapolate it up to 5 billion, it's a bit unreasonable, and therefore it's much more reasonable to do an 80-20 split, or even a 94-6% split, or even just completely removing the 94% and just holding purely the 6%, which is this example, gets you even over 500 million shares in issue. Anyway, back to the list. Number 3, institutions and banks are buying even more AMC. If we look at big investors, over 10,000 shares on the 13F list, we can see institutions have increased their positions on AMC with over 200 million US dollars. Again, you can just take a scroll through the 13F filings and see the sheer number of green adds to positions from institutions and also other institutions trimming their put positions because they clearly think the AMC decline is over. Number 4, look at the small volume while AMC is going down. It means people are not selling. Everyone knows that markets move in cycles, and that's completely normal. Hedges can drop the price and increase volumes on dark pools, but we have all of the information to calculate that volume is actually dying. As you can see from the chart here, the AMC price has been declining over the last few weeks, but on very little volume. And when we have had green days, it's often followed by very high volume, because the apes are buying back in when it bottoms out. And I also wanted to go through this tweet from the masked investor saying, let's get into this. In Germany today, a limited supply. And again, this is a screenshot from someone wanting to sell 4 shares of AMC from their broker platform, and it says, due to limited supply, the final price and value of your market order can vary. This could be prevented by a limit order if available. This is showing that there's limited supply and limited sell orders into the market. Basically, the apes aren't selling, and the lit exchanges are actually completely running out of shares of AMC to buy, because we hold all of them. This is very similar to the Volkswagen squeeze, where Porsche bought pretty much every single available share on the market, and the short sellers realised they had absolutely no hope. Data from brokers shows that retail is still bullish and buying more than selling each day. We've seen screenshots and data from different brokers that suggest more money is flowing in than out by retail traders. And again, here's a screenshot proving just that. The past 24 hours have been the most blatant manipulation I've ever seen so far in the 7 months I've been holding. This picture makes me physically sick. Here you can see we've got 94% activity from buyers and only 6% activity from sellers, and this was yesterday when the price was down around 8.81%. We've been seeing 70% of daily volume traded at dark pools. Hedges have the ability to make it look like people are selling, even though that's not true. They're shorting to create more artificial selling pressure, and that's why we're going down, even when statistics from brokers are bullish. We've seen daily screenshots and data from different brokers that every day shows more and more money flowing in than out of the AMC market cap. Problem is that some of us still use PFOF brokers like Robinhood and Webull. These brokers have been the reason why your shares have become synthetic and why hedge funds have been able to manipulate the market more than they want. They can simply give you fake shares and use your money to take positions against you and short with your money. They've also been able to hide their synthetics from the public through loopholes via options and derivatives. Number 6. Number 5 leads to hedge funds shorting, which can affect on the price, but not on the money flowing in. While hedge funds can short and try and hide the real market cap of AMC with synthetics, option loopholes and shorting the price down, they can't really do anything about money flowing in. Unless of course we continue using PFOF brokers that route orders through the dark pool or Citadel Connect, then they can manipulate our order flow. This means that at the moment, every single dollar flowing into the AMC market cap has to be countered with a shorted dollar or a synthetic share. Number 7. Number 6 leads to every dollar we invest in AMC is digging the hole deeper for the hedgies. If you buy 1 share from the real market, hedgies need to sell short 1 share in order to keep the price the same. This means that every share bought will cost hedgies more money. If they decide to counter it with a synthetic share, then the problem they're trying to solve becomes bigger. Number 8. And number 7 leads to if hedgies make the price lower by 1/2, that means they have to double the number of shorted shares. And this is exactly why hedgies can't cover now down at $30 or $20, because they've had to increase their short positions to push the price this low. So they'll have to cover double the amount of shares. Therefore, if they cover all the new shorts, it'll push the price straight back to $70, and they'll still have all of their original shorts that they still need to cover. You must realise by now that the hedgies are not covering, and they're simply just digging their hole even deeper. Hedge funds can't solve their problem by lowering the price, because it would only increase the number of synthetics and they would run out of shares available for shorting quicker. And they have absolutely run out of shares available in the lit exchanges. Number 9. The price is only going lower because of shorting and dark pool manipulation. We can see that all ETFs that include AMC and GameStop are under heavy short attack. This is because last time they started by shorting shares directly and got caught. Now they're trying to hide their shorting and making numbers harder to read. The data here is from iBorrowdesk and it's dated the 4th of August 2021. It seems that this time short sellers are attacking ETFs first, since they might try to hide their shorting and they want to loan and return AMC shares available to short. This way it looks like the short interest is remaining the same or even going down. They simply try and manipulate us into thinking that people are selling and the price is dropping because of that. which is not true at all. So there's two things here that I wanted to cover. The first one being is that hedgies are actually taking out on loan more shares of AMC, and they're using those shares on loan to cover their shorts. Technically, it doesn't cover their shorts because they're just mismarking the share on loan. Therefore, the shares on loan is going up because they're taking even more shares on loan, but the short interest is going down because the shares on loan are being mismarked as buy orders and therefore covering their shorts. And secondly, as more ETFs are buying up more shares of AMC, those shares of AMC are just available for the hedge funds to short, and therefore they short them and continue to push the AMC price down. But it's just digging their own hole deeper. Number 10. Compare the current situation to the period between February and May. Hedgies have taken new short positions on top and are keeping us at these levels as long as they can. Last time they needed to give up after their shares available to short ran out and the utilisation reached too close to 100%. Now the price is higher, so it might take more time for the apes to buy all of those shares. But this time we don't have Wonder selling shares or AMC diluting. When it becomes too expensive to short again and when the utilisation is too high, we will bounce back up. And finally, number 11. The SEC, the government and AMC are taking action, they just can't say too much too loudly. The SEC and the US government need to take time to make sure this squeeze won't destroy markets and the US dollar value. You can see all the new DTCC rules, all the talk on media and different actions they've been taking to get ready for a main event. We even saw Gary Gensler on CNBC yesterday talking about how aware he is of all retail transactions, or most retail transactions, being routed through the dark pool and not through lit exchanges. We must be close to the end because they are more open. See Gary Gensler now joining Twitter, and they're also investing to AMC through pension funds. We also know that the SEC are investigating AMC, and that's why AMC and Adam Aaron can't comment on the current short selling or comment on the stock. I also wanted to quickly go over this tweet because I think it explains it perfectly. Exactly what AC Biggums and others have been saying for months now. The SEC knows what's going on. Gary Gensler knows what's going on. But giving the stock market a facelift is not a 1-hour appointment in Beverly Hills. And this is absolutely true. Gary Gensler knows exactly what's going on. He knows about all of the transactions going through the dark pool, and he is going to put a stop to it. But he can't do it in 1 hour. While that would be great, it takes a long time to restructure the market and also prevent an entire market-wide crash and to prevent destroying the US economy. Guys, be sure to let me know down in the comments below how you feel after reading that article on AMC. Do you feel more bullish or just as bullish as ever? And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!